Hello, hello. So today I'm going to be live streaming the New York morning session, watching the NASDAQ 100. And today is actually the first day that I'm demo trading. So I was recording observations and price action. Now I'm actually pushing buttons. So today's my first day pushing buttons, and I thought, I'll just try going live. Why not? See how it goes. So I don't know if this is something that I'll be doing every day, but it was just an idea I had, so I'm going to act on it. Why not? Let's just see how it goes. So yeah, I'll share my screen. Simply watching the NASDAQ 100. I'll share that. There we go. And I'll see how this goes. I don't even know if my audio is good or anything, so I'll check that real quick. What's that noise? Audio test. Okay, that should be good. Screw it. Is there still an echo? Okay. This is funny. We live. We got 3 people watching. Nice. How's the audio? Is the audio good? Let me know. Okay. Perfect. Let me put this up. So when you're working, put your phone away in the closet. Okay, get this shit out of here. This is a distraction. This is an electronic income reducer. Get it out of here. So I take my phone and I do this. Get the fuck out of here, phone. There you go. All right. I don't know if I should keep this open and watch the stream or what, but Okay. Might just have this look right. I don't know. I need 4 monitors. Like, I don't want to see the chat at the same time. That might be distracting. But anyways, we are looking at the NASDAQ 100. So right now, we just had the high impact news drive at 8:30. And if we go out to a higher time frame, we can see that price is trading very high into a premium. So right now, at this moment, I am not interested in buying these expensive prices because I know that I can get it at a cheaper price later on. So why would I pay a premium now when I know I can get a discount later? No point in chasing anything up here. Too expensive, too high for me to buy. And it's 8:43. So next element of time is going to be the 9:30 open. So I'm just waiting for that. Right now, the price action is pretty fickle. Nothing really going on. We can see this rejection and consequent encroachment of the wick on the 1 minute time frame. We have all these clean relative equal lows down here, so we could probably run those sell stops underneath that. Maybe trade into this imbalance. But nothing really going on right now. See a lot of wicks up here. And another thing we can note is the market is spending a lot of time in this pool of buy side liquidity. So what does that potentially indicate? It could indicate accumulation of short positions. So we could have smart money getting net short above this old high, and then they could take it lower underneath these relative equal lows and these relative equal lows. So this is what I got my eyes on right now. If I were to long this thing, I would initially want to see a drop down. Let's say post 9:30, I'd want to see a drop down, run out, clean these equal lows right here, preferably right here, because if I go to the hourly time frame, we can also see that this low, that primary sell side liquidity that I have on the 15-minute time frame, it also lines up with this 1 hour buy side imbalance, sell side inefficiency. So if we were to clean out those relative equal lows underneath this low, this would be a good point of interest to anticipate a reversal. So that is something that I'm looking for. Post 9:30, if that happens, that's a very ideal scenario. I would definitely jump on that. But if I don't get that, I might not even take anything today, simply because we are just really aggressively pricing higher. We're really expensive on the day, and we are aiming for the buy side liquidity at 19,926. Ultimately, that's the draw on the higher time frame. That's what I would be aiming for. And we also have new week opening gaps above the marketplace that will act as a black hole and pull price into it. So that's another draw. So not only do we have a huge liquidity pool, if we go up to a higher time frame, right here we have these relative equal highs. So this is the draw on the higher time frame. And if we look at yesterday's session, what did we do? Well, if we look at this daily candle, look how it traded, right? We opened, we traded lower, we built the wick of the daily candle, trading into that buy side imbalance, sell side efficiency, and we closed outside of it. So that is clearly indicative of strength. That's a good indication that the algorithm may seek the buy side liquidity above these highs. So that's my read on the higher time frame. Going into today, I would say that I'm definitely expecting higher prices. Not that. And that is what I'm looking for. At the moment, not interested in anything. Yes, price action is terrible. Fickle price action. Just sitting here waiting. I think this thing is just marking time. On that news driver, we did trade higher. We had a stop run on buy side liquidity. And we're leaving all these very smooth, clean lows below the marketplace. So that is going to be a pool of liquidity to watch. A lot of back and forth in this range. Nothing really going on. Nothing to watch. Price action is not clean at all on the higher time frame. Or on a 5 minute. 5 minute, it's getting very messy. Very, very messy, very wicky. We also have FOMC tomorrow. So I do not have high expectations for today. Just sitting, waiting, stalking, hunting, patiently waiting. So at the moment, we have absolutely nothing. Just waiting for the next element of time. You can see right now that the algorithm is just marking time, doing really nothing, just trading sideways, nothing going on. But it is engineering liquidity. If we look at these very smooth, clean lows in here, we could draw a trend line on this. So that's a retail idea, and I'm going to fade that because retail logic does not work in these markets. So this right here, engineering sell side liquidity, we're trading high into a premium. If I were to get long, I would have to see a drop down first, just because we are so expensive on the day. So a lot of back and forth. We can draw this imbalance here. Trend line, retail's going to get long off of that. I'm going to fade that. Here's a pool of minor sell side liquidity. I'm going to take that. Minor sell side liquidity. So we are trading into a very high premium. So we can watch this wick on the 15-minute time frame. We can drop a Fibonacci on that. So there we have a higher time frame wick. That's a PD array. There we go. So there we have a 15-minute premium wick. So that's something to watch. Now, if we can't trade up to consequent encroachment with this premium wick, that would be indicative of weakness. So we can see on the higher time frame, we have relative equal lows building here, and below that, we have an imbalance. And if we look left, we have an inversion fair value gap. So looks like we have multiple POIs coming together in this area. But what I would absolutely love to see is a drop down below this sell side right here. These clean lows, because on the higher time frame, this is an hourly imbalance. I go to the hourly, boom, right there. So if we were to clean out these lows right here, drop down into this, that would be a scenario for me to watch. That is what I am thinking today. I think we're clearly drawing higher towards this level right here. Now, everything that I'm saying right now could be absolutely wrong, and we could just run over everything and just die. There's always that possibility. But with where we are at, we are in close proximity to these new week opening gaps and this key level of buy side liquidity. And we can see that the higher time frame order flow is very bullish in today's session. We have an hourly order block. We're trading down into that. So 9:30, I would like to see a Judas swing, a drop down lower, clean out these lows, trade into this hourly imbalance, and then look for a signature and price action that tells me it wants to go the other way. But notice how we're making everything jagged up here. Everything is very jagged up here. So where the market is smooth, that's where it's going to go, because that is where sell stops are resting. Where it's jagged, it's going to move away from. Where it's jagged, we can physically see that the damage is done on the chart. Notice how we have a wick up above this high right here, right? So we know that the buy stops are ran above this high. Now, where is it smooth? We can see that's smooth here, right? These lows are relatively equal. It's pretty smooth down here. But I'm watching this right here. You could also draw out this wick right here, consequent encroachment of that. So how far can it trade into this imbalance? Well, we have to look left and see if there's any PD arrays that align with that. We have this, right? Could drop down into that. So what does that look like on the 15? Oh. So on the 15, here's that wick, that discount wick on the hourly time frame. We could drop down into that in this imbalance right here. Or we could just absolutely leave everything and just keep trading higher. In that case, I wouldn't be interested in anything, because it is too expensive for me to buy. And I buy cheap discounts and sell expensive premiums. But look how jagged it's getting up here. So we know the stops are taken because we were able to trade above this wick. So that is how we know the damage is done up here. The stop run has taken place. Notice these clean lows building below. We have a balanced price range in here. Hits the order block, trades higher. So now we'd have to study and see, can we close over the consequent encroachment of the premium wick? That would be our next piece of intel on the higher time frame. Notice all the sell side liquidity building up below these lows. So there's consequent encroachment of the 15-minute wick, and then we got it on the 1 minute. So we inverse this sell side imbalance. Notice how we're trading to the upper quadrant there. So we could see some acceleration, maybe take out this high because of this reaction right here. But right now, it looks like we're just marking time. We're not really doing anything. We're just trading sideways, waiting for that 9:30 open. Because all this is very, very back and forth. All this is very messy. But what stands out to me is this down here. This trend line, this retail idea. So we got to think about how are they going to utilize that for the narrative. So studying consequent encroachment of the wicks, studying this pool of sell side liquidity. So we're not immediately repelling this inverse fair value gap, we're kind of just hanging around. So that's a good indication that it would probably fail. This is nothing that I would trade off of. Very back and forth. There's not a lot of separation in the ranges. We don't see too many imbalances. I just view this as time distortion. And we sit and we wait. We don't do anything. We still have a whole another half hour until 9:30 open. See if I can pin a comment. Yeah, whatever. So we traded down to the lower half, but we're still closing in the upper portion. Bodies tell you the story. Wicks do the damage. We have a little imbalance in here as well. Wicks down into that. But at this moment, it's definitely a very, very hard read on what this thing wants to do because we're just seeing time distortion. It's not going anywhere. It's not doing anything. So even when the market's trading sideways like this, we can still note out PD arrays, right? So notice how we have a volume imbalance. We open, we trade down into it, we leave this wick. So now we see if they want to take it above this high and this high. We also want to study how we react to the premium wick on a 15-minute chart. So there's a nice reaction out of that volume imbalance right there. I like how we just wicked into this little imbalance right here. So initially, I didn't think that this inversion fair value gap was going to hold up because we didn't see a quick reaction out of it. But look how the body's closed. And now look, now we're accelerating into this short-term high. See if we can take it up there. Still trading very expensive on the day. So body's closing the upper half of the inversion fair value gap, although we have the wicks. Wicks to the damage, and the wick is just simply referring to this little inefficiency right here. We open here, we trade down to the volume imbalance, also the order block. Boom, trade higher. So then you want to see if they take it up here and here. Now we have another wick here. We could also study that. But here's that 15-minute wick. See what AES is doing. That's disgusting. And this is why you don't trade ES. Because it looks like this. Sloppy, back and forth. So we have a volume imbalance in here. You'd want to annotate that. Look where the bodies are closing on that 15-minute premium wick. On the 1 minute. So we do not have a change in the state of delivery. The market is still in a buy program until we violate this open price right here. So we also have a 15-minute volume imbalance. I didn't see that at the time. Trade down into that. Now we're trading higher. So now we're going to study how price reacts to the premium wick. See what that looks like on the lower time frame. Watch how he reacts to this volume imbalance. Still want to see if they can take it up here. So now we're forming relatively equal highs, and we have relatively equal lows. Got my journal. I got a paper tablet. This thing changed journaling for me. Crazy. I don't know what I would do if I didn't have this. I absolutely love this thing. Definitely one of the best investments that I've ever made. I would consider it an investment because it's a tool. It's a tool that I use for what I do. If you're a trader, you need a journal. You have to have a journal. Journaling is it's everything. Journaling is the monster lab. So a volume imbalance in here. This body doesn't even close below it. So we still want to study if they want to take it up here or not that high. We also have this high right here. There's a news high. I mean, this thing is just aggressively running towards buy side liquidity here. New week opening gaps. It's a strong draw. So we might not even see a drop down today. See if we can get a close above consequent encroachment of this wick. If we do, it's a good indication that we'll probably take out this high and simply just keep drawing higher. But this thing is very expensive on the day. Let's take a look at Bitcoin. Nothing going on with Bitcoin, really. Wonder if my computer can handle this. That's doing good. Perfect. Okay. Take a look at the 5 minute. All this is so clean. I mean, if they were to drop down and take out all of this, that's an ideal long. But notice how this thing literally just keeps pumping higher. So I am absolutely not looking to fade this. I mean, I want to look for something to get aligned with it. So we do accelerate to that high. And this all started with this inversion fair value gap. Closed over it, trade outside of it, trade down into it. This wick was doing the damage, simply referring to this little inefficiency right here. Notice where the body closes in the upper half. What does that indicate? Strength. Then we have a volume imbalance. We open here, we trade down into the volume imbalance, trade higher, and then boom, we start to see a large up close candle, another imbalance. This never gets traded to, it's left open. So that is indicative of strength. The fact that we can't even reprice down to a bullish fair value gap, that is a sign of strength. We take out this high, and we just keep going higher. So if it just keeps going higher, then I'm absolutely not trading today. I would absolutely not take any trades because it's just too expensive. So we have a stop run on this high right here. Higher time frame just keeps pushing. So if we close above consequent crunch for this premium wick, the next draw is likely this high. And then above that, we have new week opening gaps. So on the news driver, we had a stop run on Friday's daily high. Got all these clean lows building below. I would really like to see a drop down, clean these out. Then look for a signature and price action that tells me they want to take it the other way. I'm not interested in any of this. We have an order block right here. Trade down into the order block. You can study this wick. Delete that. So look how when we got above that 15-minute wick, consequent encouragement at the 15-minute wick. Look how we trade down into it, wick off of it, and then we have this candle right here. So the lower time frame is going to confirm your higher time frame PG arrays. The lower time frame confirms the higher time frame. We know that this PD array is useful because of the lower time frame. Oh, I forgot to annotate the macro. Macro, there we go. So there's your 850 to 910 macro, and we can study what price does within the macro. So initially we had the sell side imbalance. Using it as resistance, we close over it, disrespect it, and then what do we do? Notice how the bodies close in the upper half of the inversion fair value gap. Now, honestly, I thought it wasn't going to hold up because we were kind of spending time here. And I saw this large down close candle that was still open, and that was simply just referring to this little inefficiency right here. So this could have been a quick little trade. It's just an observation to record in price action. You don't have to trade that. But that was a good little reaction off this inversion fair value gap, as well as this bullish fair value gap. Volume imbalance, trade down into it there, and the order block. So that could have been another entry. And then we have this imbalance left open and this not traded to. So if the market can't even reprice to a discount, a short-term discount, which would be these discount arrays, then that is clearly indicative of strength. And notice how during this macro, we are just really aggressively repricing towards buy-side liquidity. So that's something you can study. It's not the setup that I'm looking for, but it's something to study. And today is my first day of demo trading since I started studying ICT. So honestly, today is quite a milestone for me. I definitely feel confident in my ability to at least go in there and know what I'm looking for. I know specific repeating characteristics of the daily range and how I want to approach that. I know what I want to see post 9:30 today, so I'll simply just be looking for that. And if it gives it to me, then I'll see if I can find a way to get into a trade. And I'm only aiming for a low threshold objective. I'm not holding for a 100 handle run. When you first start, ICT said in his live stream yesterday, you're simply going for low threshold objectives. You're not going for the ultimate terminus. You're not going for 100 handle price swings. You have to start somewhere and you have to grow into trading those 100 handle price swings. So look at the work off of Friday's daily high. Boom, to the tick. 19,81350. What's the high of this candle? 19,81350. Perfect. To the tick. So this is getting very excited here. Trading way up into a premium. Larry, is that you? Who is Auda? Is that your old gamer tag? Isn't that your old gamer tag? What's up, noob? How's cold calling? OG YouTube. Did you just make gaming clips and shit? Nice. How do I like a comment? Can I like a comment? I don't know. Bro, this is my first time doing this, so I don't know if this is going to be like a distraction or too much. It's just going to take my attention from reading price action, but I'm just literally just saying how I'm reading the market. So I kind of like it. And yeah, just seeing how it goes. I might start doing this every day if I like it. If I don't think it affects my ability to read price action, or if I'm too focused on the live stream instead of trading itself, just giving it a shot. Why not? I had a thought, so I had to act on it. It's like, you know what? I want to live stream. So I was like, live stream. I also hit 50 subs. I think on Sunday I was at 30, and then it jumped to 50. So 50 subscribers. Let's go. So on 15-minute, we did close over to consequent correction of this premium wick. I do like that reaction off of Friday's daily high. Now we're forming relative equal highs. We have this news high right here. News highs and lows are a good draw on liquidity. So since we are violating consequent correction for this, look at this order flow now. To the tick. That is absolutely algorithmic. That is not buying and selling pressure. The buyers are not stopping this right here. That is absolutely algorithmic. It is not buying and selling pressure. So I'm just waiting for the 9:30 open. 9:30 open. I would like to see a drop down, give me a short-term discount, and then leave a signature and price action that indicates they want to take it the other way. Just looking for my trade model. For the day, I am bullish. I'm thinking that we could drive higher into the new week opening gap here, or the buy side liquidity here. But notice the close below Friday's daily high on both of these candles right here. We have all these clean relative equal lows down here and here. So ideally, what I would absolutely love to see is a drop all the way down here. clear this sell side liquidity here, trading to this imbalance. There's also a discount wick on the hourly time frame right here. Did we touch that? I think we come off by like one tick. Still a lot of back and forth. We got FOMC tomorrow. I don't really have any high expectations for today. If this thing just keeps pumping higher, then I'm just simply not going to be a part of it, because I don't buy expensive prices. I buy cheap prices. I buy discounted markets and I sell premium markets. So what I used to do was, as a retail trader, well, I still am a retail trader, but thinking like a retail trader, I would buy breakouts above old highs, trading, supply and demand, and order flow, and all that unnecessary shit. So I was looking at this setup right here, noticing how we took all this buy side liquidity here. And we have this fair value gap right here. So I was starting the reaction out of this fair value gap because I know that usually when we run a pool of liquidity, we initially take it, then we retrace, and then we continue. So I was studying the reaction of this, but I was not willing to take a long there because that would literally be buying at an old high. So I don't buy at old highs. I sell at old highs. I don't buy at old highs. But we had a nice reaction to this right here. We close above it, trade down to the upper quadrant, close above, and then the next candles accelerate higher, take out this short-term high. This is something that I would do in my old days, though. I would literally buy a breakout above this high. I would see this and then come back down and I'd buy that. Now, if you buy that, look what happens after. You just get ran over. So this is why you don't buy in a premium. Wait for a discount. So it looks like finally we're aiming for the sell side liquidity here. Let me get previous settlement. Where did we settle? Oh shit. So we have a large premium opening on today's range. Here's previous day settlement. You mark that. Here's previous day settlement. So at the 9:30 open, I'm going to find the opening range gap, run quadrants on that, because there's a 70% chance or 70% likelihood that the market trades down to consequent encroachment of the opening range gap in the first half hour of market open, in the opening range from 9:30 to 10 o'clock Eastern Standard Time. But look at the reaction off of Friday's daily high. That is perfect. And now ahead of the 9:30 open, we're drawing towards here. Trade to this deep, deep premium. Perfect reaction off of Friday's daily high. This is why you leave previous day highs and lows on your chart even after they are taken, because the algorithm knows there's liquidity around those levels and it's going to refer back to them. So normal logic, normal thinking, you would see to run above a previous day high and then you remove that level from your chart. You never even consider it, never think about it again. Using this logic, you leave it on there because you know that the algorithm knows that there's liquidity around that level and it's going to refer back to it. So we're drawing towards Monday daily high as well as the sell side liquidity below here. Now, initially, I would like to see a drop down. I would like to see some repricing to a short-term discount and then leave a signature and price action that indicates they want to take it the other way. Then I would look to get a long. But knowing this liquidity is below the marketplace and knowing that we have a retail idea here, right? We have a trend line. We could also look for a sell scenario, but this is not my trade model. It's not clean at all. I don't see an opposing imbalance inversed, so it's not something that I would take. And it's ahead of the 9:30 open when the market is waiting for that next element of time. So this is my first day of demo trading since studying ICT. We'll see how it goes. And look at that reaction off of Monday's daily high. So literally just what I was saying is you want to keep these levels on your chart because the algorithm is going to refer back to them. Look at the reaction off Friday's high and Monday's high. That's beautiful. That is perfect. Notice how we stay in the lower quadrant of this sell side imbalance buy side inefficiency the whole time. That is indicative of weakness. If I were to drop the middle line on it, we just wick up into consequent encroachment of that. So it's perfect. Perfect reaction. Indicative of a heavy market. And it also leaves a wick in here, so we can also use that. And look how, boom, we trade up to consequent encroachment of the wick that it lays into the sell side imbalance, buy side inefficiency, rejects that, rolls over. So, I mean, there's all kinds of things that you can look at. Okay. What do we have right now ahead of the 9:30 open? Damn. So we have a smart money reversal up here. The market's drawing towards all this liquidity here. So this is something that I have my eyes on. I would absolutely love to see the market come clean out these lows and these lows. That would be a very nice discount, a very deep discount for me to get in sync with the move. So we have a perfect reaction off of Friday's daily high after running it. So we are running the previous day high. Now I will just simply have to see what sets up at the 9:30 open. What does this thing want to do? We have a little consolidation right here. We have relative equal highs in here, relative equal highs here. So this would be my primary buy side liquidity up here. And take that. So there's your primary buy side liquidity. And then if I go to the higher time frame, this would be my ideal point of interest to anticipate reversal. This primary sell side liquidity pool here. Now we also have clean lows here, which is annotated on the lower time frame, and here, and here. We also have a new week opening gap, so we have relative equal lows paired with a new week opening gap. So that would be a strong draw on liquidity. We have a smart money reversal at the previous, not the previous day high, but Friday's daily high. So this is the previous week high. Mark that. So that's that previous week high. Yo, what's up, Tio? I'm trying to be like you, Tio. I'm live streaming now. So I would like to see the market draw here. Look for something in price that indicates it wants to go the other way. Yes, sir. I'm just seeing how this goes. I literally just had a random impulsive thought, like I should live stream. And so I'm doing it. And today is the first day that I'm actually placing trades since I started studying this new strategy. So it's like, why not? Could be a good thing, could be a bad thing, but I don't know until I try it. So I'll give it a shot. Let's get it. Now I'm executing trades. So today's my first day taking trades since I started studying this new strategy, and I'm doing it live. So let's see how this goes. These lows are still left intact, so that's still a point of interest for me. Still watching these lows down here. These 815 lows. We also have a balanced price range as well. Ideally, I would like to see that. Sounds good. Good luck on your exam. Order flow is still not changed on the higher time frame. It's still bullish. We have no change in the state of delivery. Although something that ICT did mention in his live stream, a change in the state delivery is also valid when you have that last candle that refers to a higher time frame PDR raise. So maybe it could be this candle right here, right? Because we are referring to Friday's daily high, the previous week high, waking off of it. So once we close below the open price here, that could be a change in the state delivery. But we just have the 930 open. So now we want to see what do they do with price. So this is going to be my opening range gap high because we have a premium opening. Right there. And now I want to get consequent encroachment of this. We have a huge gap opening, literally over 100 handles. So now I'm going to find consequent encroachment, the midpoint. Right there. What is this gap? What just happened? So this is consequent encroachment of the opening range gap. Dash line. And now we see what they want to do with it. So we are still pumping into a high premium, which means I'm absolutely not interested in any of this at all. So we can see that we inverse this CIVI inversion fair value gap now. Inversion fair value gap. Now I wait for first presentation. So we have a stop run above the news high. Now we see if they want to keep pressing it higher. We have all these clean lows below the marketplace, so that could be something to target if the market presents a sell scenario. So we're still respecting this inverse fair value gap. Look at the work around the previous week high. We can study consequent encroachment of this wick right here. Boom, we wick off consequent encroachment there. So in the first half hour market open in the opening range, we have a 70% likelihood of trading to consequent encroachment of the opening range gap, which aligns with a new week opening gap and relative equal lows. So that is a potential draw. Now, if the market presents a sell scenario here, that's 100% what I would be targeting. So it looks like this may be first presentation. So if this were to be a sell side imbalance bias inefficiency and we inverse this, that would be something that I would consider a short off of. Right, so I need to study how this candle closes because now we have an inversion fair value gap here. Here's first presentation. So I would look to sell short on a run back into this. And I would target first the sell side liquidity here. That would be my low threshold objective. Now it could be a little too early into market open. But what I'm seeing on the higher time on the 1 minute chart, now if we just keep pressing lower and don't give me a selling opportunity, then that's fine. But now we have a bearish breaker on the 1 minute time frame. We have a fair value gap, an inversion fair value gap, a change in the state of delivery. We have a stop run above the primary buy side liquidity. Look at the work on consequent crash for this wick here. So if we trade back up into the opening range gap high right here, then I'm going to sell short and I'm going to target initially the sell side liquidity here. And then next, I would aim for this pool of liquidity, but I'm just going for low threshold objectives. So I think I would just cut the trade here. Hello. So this is my trade model, present and price action right now. Now I simply just wait, see if it gives me an entry. If it doesn't, that's fine. Market's going to be here tomorrow. But I would absolutely love to see a return back to this inversion fair value gap, first presentation, like this. Let's see. Seeing everything that I like. See if I can get a drive back up into that inversion fair value gap, and I will sell short in there. So it came just shy right there. So this would be my first execution demo trading. So let's see. Coming just shy. Looks like I might have missed the entry. We'll see. Just being patient, calm, relax. And that was it. So looks like I might have missed it. See if I can get a drive up in there. That would be perfect. Looks like we might have just came one tick shy. One tick shy. Referring to this volume imbalance here. Yep. So just barely missed an entry there. It's fine. It came one tick shy of first presentation and rolled over. I mean, it could still reach up in there, but we've already traded to my first objective. So I can reflect on that, see where I went wrong. In the live streams, ICT does outline to have your entry one tick above. And we could drive back up into it. So it's getting pretty jagged down here. These relative equal highs up here. We do build these relative equal highs, so ideally I would like to see us trade above those relative equal highs, run that. I would like to sell short in first presentation if we can get back up there. And I would like to take it down here. Just being patient, still waiting. So we have to work off of that old high, Monday's daily high. We have this little inefficiency right here. I'm going to take that. This imbalance is holding price down. A lot of back and forth in here. So we did drive back up into first presentation. And we have a nice rejection. I don't know why it's not letting me move my take profit. There we go. So let's see if this comes up and grabs the stop. So this is my trade model. And I don't have it on. Okay. So this is my trade model present in price action. So I sold short on a drive up into the first presented fair value gap as well as an inversion fair value gap. That is where I want to get my entry. And I'm targeting the relative equal lows down here as well as a new week opening gap. But on the higher time frame, the order flow is pretty bullish, and I'm kind of fading that. So I'll have to study and see how we react to this. But I do like the close below the first presented fair value gap, so that's good. Although we do see a lot of back and forth, it's not really doing anything. So my stop loss is above consequent encroachment of that premium wick. It doesn't have to be above candle too high. I do like the closes outside of it. That's good. But I now want to see the market accelerate away from it, and we're returning back into it. So that's not good. If I'm being honest with myself, I think that I'm going to get stopped out. This is my first demo trade, so we have a little bit of emotions involved. But I see it in the chart, so I execute upon it. There's nothing else I can really do. If I'm incorrect, then I know I'm incorrect. I do not like how we're working through first presentation. And that'll probably go reach up, grab the stop. On the 5-minute, we are leaving a lot of wicks across first presented fair value gap. So that could have just been a stop run on both these highs. We got these relative equal lows down here. The chart's looking a bit messy, so I'll try to clean that up. Okay, so that's the reaction I would want to see. So initially, I felt a lot of doubt when it was moving against me, but what I'm seeing right now is good. What I see on the higher time frame, it looks good. If I can get this 5-minute close below these up close candles, I think it's probable that we'll draw to the new week opening gap as well relative equal lows pair with that. So that is a good draw on liquidity. Simply my trade model present using the first presented fair value gap. And I'm aiming for the new week opening gap paired with these relative equal lows. So that is exactly what I want to see. And now I want to see the market accelerate into these relative equal lows. And there we go. Take profit. So that was my first trade I've ever executed in a demo trading environment. That was my first executed trade since I started studying ICT, and it delivered to take profit pretty fast. It was simply, let me get this off. It was simply using my trade model, which is just a breaker formation. We have a high, a low, a higher high, and a lower low. I see an inversion fair value gap, a fair value gap, first presented fair value gap as well. Now below the marketplace, I see all this low resistance liquidity resting below. So I know that the market is trading to a very, very high premium, engineering sell side liquidity. If we look below here, ignore this. This is just me testing demo. I have these relative equal lows here paired with the new week opening gap. So that is a very strong draw on liquidity. I see my sell model above the marketplace and a very expensive high premium. So I take it. It's everything that I look for. If I go out to the higher time frame, again, ignore this. This is just me testing demo. But I have a new week opening gap, primary sell side liquidity. I know that in the first half hour trading, we have a 70% likelihood of trading down to consequent encroachment of the opening range gap. So in this area of price action, I have relative equal lows, a new week opening gap, and consequent encroachment of the opening range gap. So that is a lot of factors coming together in one area to support the logic behind this trade. That is a very strong draw. And if we look what happened in the overnight session, this thing is very, very expensive on the day. Very expensive on the day. And this reversal can also be framed off of a very key pool of liquidity, the previous week high. So notice all the 15-minute closes below the previous week high. That is a good indication that price is weak and we may want to go lower. So it showed me the signature in price action indicating that it wants to go the other way. High, low, higher high, lower low, breaker, inversion fair value gap. Relative equal lows, very expensive on the day, a huge opening range gap. Everything just lined up. Now, this is my first time trading in a demo environment, so I have to be honest, I felt a lot of emotions when the market was trading back up into the first presented fair value gap. I thought that this was actually going to run and grab my stop, which I had above consequent encroachment of this wick right here. We don't need to have our stop loss above candle 2 in the fair value gap pattern because we have this wick, and a wick is also treated as an inefficiency or a gap. So we have two gaps overlaid in one area of price action. So you can put your stop loss 2 ticks above consequent encroachment of that wick right there. And the stop never got hit. Although I didn't have much faith in this trade playing out because of the way that we were trading back into the first presented for value gap. I didn't like that. I wanted to see a quick reaction right out of it. It didn't give me that. It hung around a bit. So I did feel a lot of doubt. I wasn't really anxious. So that's good. And now we can see that this thing is just low resistance liquidity run. So there's my initial objective that I was aiming for. But when I'm doing this, I have to aim for very low threshold objectives in the beginning and then grow onto holding into further objectives. So for at least 2 to 3 weeks, I have to just aim for low threshold objectives. And then once I get comfortable with that, once it gets boring, aiming for the low threshold objectives, then I'll aim for my farther targets, which in this case would be the primary sell side liquidity here. Now, if we have the new week opening gap and these relative equal lows and the opening range gap consequent encroachment, all this one area, it's very likely that if we run these lows, what's stopping the market from running these lows, right? So that's a very probable target as well because we have all these factors coming together in one area. So everything that I need to see, that was beautiful. That was good. And I sold short, trading back up into it. And I'm not going to lie, I was shitting my pants when this was a bold face up close candle and I thought I was reaching for my stop. I wasn't really shitting my pants. I was like, okay, whatever. I'm going to get stopped out. It's fine. The whole point of this process is to put myself in a harmless environment where I can make as many mistakes as possible. I can get it wrong as many times as possible without losing a single penny. So, I just got to focus mastering this shit first, do my demo trading, do the due diligence, put in the time, put in the work, stay down to the process. And by forcing myself to trade in a demo environment, I'm literally forging patience and discipline. So I know that I'm doing all the right things right now, which is a good feeling. And I know that I got great things coming my way. So there's my first executed demo trade. It played out. It gave me everything I needed to see. And that's going to be it for this live stream. I'm just going to go review that trade and just tape read the rest of the New York morning session. If you're watching, thanks. And I might stream tomorrow. I don't know. Okay, see ya.